a very warm welcome to a brand new weekend edition of Buy Now, Sell Now. I'm Kamya Verma.
Hi everyone, I'm Avan Devash. We've got lots lined up over the next half hour. So let's run you through what exactly we'll be discussing today on the show. In fact, we've got some individual stock queries lined up on Asian Paints as well as Reliance Industries.
Well, not just that, we'll also be discussing Babu Dorairat's portfolio on the show.
Time to bring on board our guests then, and joining in is Avinash Gorakshekar, Head of Research at Precision Investment. On the fundamental side and on the technicals, we have Sameet Chavan, Technical Analyst at Angel Broking. Great to have you both on board. Ashok V. Apte has got a query on Asian Paints. Let's listen in.
My name is Ashok Vishwanath Apte. I am resident of Mumbai and by profession I am an engineer. I have some stock queries. I am a long-term investor. I have purchased Asian Paints Limited stock at the rate of rupees 700. 200 number stocks I have purchased, and I want to know when should I sell it. I can wait for a period of 6 months to 1 year.
Well, Mr. Apte is a long-term investor and he clearly bought the stock at a good price, given that the stock recently has seen a good run-up and done exceptionally well in the last 1 month, touched the 52-week high of 924. Sameet, would first like to get in your thoughts. Do you think he should have booked his profits then, or would you expect the stock to see that high again or even surpass it? Do you think that the stock has, this run-up that the stock has seen off late is likely to continue?
Yes, with a medium to long-term perspective, chart structure looks quite encouraging. Recently, the stock has seen a stupendous run from the level of 680-700 and has now reached 900-920. In the near term, it might consolidate in a range of 940 to 860. So with a near-term perspective, if he wants, he can book his partial profits and he can maintain its balanced quantity with a stop loss of 800 on a closing basis. With a medium to long-term perspective, we expect the stock to surpass 1000 level, and definitely it can be held at current level also. In fact, if stock gives a decent decline towards 800, 820, it can be bought also. So at the current juncture, he can remain invested by keeping a strict stop loss below 800 on a closing basis.
Okay, clearly on the technical side, this seems like a good candidate to have in your portfolio. And in fact, you could look to book partial profits in this stock, but clearly you can buy more shares as well. That's the call coming in from Sameet. Meantime, on the fundamental side, well, it has been very quiet on the charts over the last 1 month as well as in the last 1 week with the market sell-off. Clearly, the numbers seem to have indicated that the consumer companies do continue to face challenges. Not just that, the management has been fairly circumspect, talking about the demand outlook in the domestic side. That's likely to remain subdued. Volumes, though, as per the traditional, paint companies, has surpassed that. 3 to 4% is what they grew, and volume growth for Asian Paints has been certainly higher than that, but that was clearly aided by price cuts. But there are quite a few risks as well as concerns that have been flagged off by the analyst community in terms of valuations, as well as talking about margin erosion in the long term. So Avinash, in light of all of this, what is it that you would advise our viewer here with Asian Paints?
No, I think despite the fact that, most of the analysts are slightly worried about margin expansion, I think one thing which clearly goes in favor of Asian Paints is the sharp drop in crude prices. And I think given the fact that crude prices are going to remain soft for at least the next 2 to 3 quarters, and crude prices likely to go even below $45, which currently prevail. My sense is that despite the fact that volume growth may not be more than 4 to 5%, and the fact that volume expansion may be difficult, but the commodity cycle is definitely very positive for Asian Paints, and that is going to help margins expand much better than what the street expects. The coming festive season also, we are very hopeful that we could see volumes going up, because this is typically an uptick season for Asian Paints. So my sense is, since he's got into Asian Paints at a fairly good entry point, I think he should hold on. My sense is that this is one of those few companies where there's a good amount of premium scarcity which is prevailing in the markets, and even on every decline this could be a good stock to put in one's portfolio. So I would be holding on to the stock and advise the investor that if he can hold on for at least a year, probably a target price of 950, 960 looks possible. I think clearly the commodity cycle and obviously the volume growth pickup from the festive season should help the company.
Okay, so clearly the pain in the commodity space is again for Asian Paints, and the softer crude oil prices is working in the favor of Asian Paints. And our fundamental guest Avinash is quite bullish on the counter and expects the stock to go as high as 960. So Mr. Apte, both our experts are of the view that you should hold on to your investment there. You also have a question on RIL, Mr. Apte. Take us through your holding there.
My second query is about Reliance Industries Limited. I have purchased 1,000 shares at the rate of rupees 900, and I want to know when can I sell. Here also I can wait for 6 months to 1 year.
Okay, that's the call coming in on Reliance Industries, and let's help him out. Now, remember, the last 1 month, in fact, we've seen the stock pretty volatile. But on the fundamental side, also, the company has lost its tag of being the most profitable company. This quarter, it was taken over by IOC. In the previous quarter, it was taken over by TCS. Recently, it's been in the news for getting the nod for the payments banks. There have been some fundraising plans as well, $225 billion via overseas bonds. But on the whole, Avinash, one can characterize this stock as a bit of a slow mover. Given that the results, have been factored in as well, what is it that you would tell Mr. Apte to do with his holding?
No, I think the simple answer to Mr. Apte's question is I think he should have a slightly longer time period if he puts his money in Reliance. As you rightly mentioned, Reliance is a slow mover, but the kind of variables in its business model are definitely quite unique and very strong. Apart from the E&P business, where we have seen decent amount of improvement in the gross refining margins, much to the street surprise, I think the big kicker to Reliance would obviously come from the 4G telecom rollout, which is expected to happen sometime in December. So my sense is I think we could see a lot of news flows happening around this business, and clearly with the kind of innovative pricing and the kind of innovative marketing, I think Reliance definitely should get a decent share in the telecom market. So my sense is if he can hold on for a period of at least say 18 months, which is a reasonable period if one really wants to get a good upside from Reliance, he could get a target price of around 1,050, 1,100. So before that, I think the stock may remain in a very lackluster zone, and there could be some marginal downside to his purchase price. But overall, medium to long-term prospects look good.
Okay, positive news flows expected for Reliance, and clearly Avinash is expecting the stock to do very well, but in the longer term. So, Mr. Apte, you need to work on your time horizon for RIL. But let's get in a check on the technicals as well. And last 1 week, the stock has shaved off close to 6%. And in fact, the story has not been any different for last 1 month. 10% shaved off for Reliance. And Sameet would like to get in your thoughts, just going by the technicals of Reliance Industries. What are the charts indicating?
See, looking at the weekly chart, it can be clearly seen that the stock has formed a strong base around 800, 820, and during the month of June, we witnessed a good move from the level of 900, 920. Yes, recently the stock has corrected a bit from its higher levels of 1020, 1040, but we believe that the overall height of higher bottom formation is still intact. Hence, he can remain invested. 860, 870 is a strong support for Reliance. He can maintain his position by keeping a strict stop loss below 860 on a closing basis. Over the next few months, yes, there's a possibility that Reliance might retest its recent highs of 1020, 1040. So as of now, he can hold on to his position. 860 would be a strict stop loss.
Okay, watch out for that stop loss level of about 860, but nonetheless, on the fundamental as well as the technical side, the call is to stay put when it comes to Reliance Industries. Perhaps increasing your time horizon is the way forward. But let's dip into that quick break right here on the show. Do come right back. On the other side, Babu the Rai Raj's portfolio. That's what we'll be discussing. Stay with us.
Welcome back. You're watching Buy Now, Sell Now Weekend.
Time to address our portfolio advisor segment then. Babu the Rai Raj, well, he has sent in his portfolio. Let's run you through his profile. He is 41 years old, a software engineer with a long-term time horizon. Well, let's run you through all of the stocks that he holds. Banking dominates first up. He's got 100 shares of Axis Bank purchased at 454 rupees. There's HDFC Bank, 50 shares at 941. ICICI Bank features on the list, 500 shares at about 302 rupees. Moving right on, Karur Vysya is in the portfolio, 195 shares at 513. There's IT exposure as well. So in the form of HCL Technologies, close to 80 shares, he's bought it at a level of 759. Infi, of course, features on the list. 150 shares, 968 is the buy price. TCS, so he's clearly got to the big four almost in his portfolio. 70 shares at 2558. There's lots more IT exposure, by the way. Tech Mahindra, he's got it at a level of 533. And there's Wipro as well. 100 shares picked up at 561. To the pharma names, and once again you'll notice it's clearly the marquee names that he's handpicked in his portfolio. The Cipla, 75 shares at 619. A conservative investor he is, that he's picked up Lupin, 80 shares at 1425. He's also got a Sun Pharma, 60 shares at 862. Avinash, a portfolio like this, which is marked by a lot of blue chip names, there isn't that much diversification. There's banks, there's IT, and there's pharma. How would you rate it?
I think overall, the portfolio is decent enough, and the investor has actually chosen only blue chip and marquee names, which is a good point because clearly, the investment horizon is of the investor is about 5 years. So I think it's better to stick to quality. Clearly, I think he's probably well researched the stocks and entered the stocks at pretty decent levels. So in most of the cases, in most of the stocks across sectors, I think he's sitting on a marginal to moderate profit, and I think the entry prices have also been decently good.
Right, Avinash. So let's discuss his individual stocks, and he clearly has a lot of exposure to the banking names. Axis Bank is the one that he bought at about 454. What's the recommendation there, given that he's making some marginal gains there? HDFC is the other one, which he bought at a price of 941, and ICICI Bank pretty much at the same buying price for Babu. What is it that you would suggest as far as first three stocks are concerned?
No, I think all the three banks which he has chosen are very well-established banks. Talking about Axis Bank, the stock is currently around 522, and despite the fall seen in the price, our sense is that within the private banking space, Axis Bank is the third largest bank, and with the kind of deposit growth and the kind of NIM expansion we expect, I think if he holds on for a period of, let's say, around 18 to 24 months, I think he could get a price of 675 to 700 here. The same thing applies to HDFC Bank, another marquee name, and I think we have seen both the CASA deposit growth as well as the profit growth growing very commendably at around 20 to 25%. So here also, I think given the time horizon he has, I think a 18-month period could give him a price target of around 1200. As far as ICICI Bank is concerned, there has been some volatility on the asset quality side, but nevertheless, in terms of the size and in terms of the kind of asset portfolios it holds and the kind of retail reach it enjoys, my sense is I think that in the short term volatility will continue, but in the medium to long term he'll make good money. So here he could look at a target price of around 360.
Okay, that's the whole recommendation coming in on the first three stocks, and I reckon with those kind of names there aren't going to be too many chops and changes. Let's move right on then. Karur Vysya Bank, what is it that you'd advise here by way of targets? Cipla, it's a good stock. He is making some good money as well on that name, and there's also Lupin in the portfolio. What's the call?
Now, I think within the mid-banking space, I think Karur Vysya Bank has done remarkably well. We've seen pretty good numbers coming after the Q1 numbers. More importantly, both the CASA as well as the retail deposits have grown at a good pace. And I think clearly, if one takes a medium to long-term call, Karur Vysya Bank definitely should do well. There are several marquee HNI investors who have also entered the stock and who are still invested here. So my sense is you would look at a price target of around 570, 575 again over the next 12 to 15 months. As far as Cipla is concerned, we saw some profit booking after the Q1 numbers. Numbers were very good, but that included a one-time exceptional income, from a drug called Nexium, and which the company doesn't expect in the second quarter. But nevertheless, if you see the top line and the margin expansion for Cipla, my sense is over the next 12 months, he could get a price of 730, 750 here. Clearly, I think he should hold on.
Okay, whole call coming in on all the other three names as well. But let's talk about one more stock that he has from the pharma space, which is Sun Pharma. HCL Tech, what would you suggest? Infosys has been in news for quite some time now. What's your recommendation, Avinash?
No, I think as far as Sun Pharma is also concerned, I think, if one were to discount FY16 and look at FY17, definitely, the company is going to do well once the integration of Ranbaxy happens. And clearly, we could see synergies happening here. So I think from a longer term perspective, one could expect a target price of around 1100 here. As far as HCL Tech is concerned, the Q1 numbers were not very good because a lot of investments have gone into the IMS space, and the company has actually admitted that the 180 basis point drop was actually due to these kind of investments. But nevertheless, considering the kind of rupee weakness and the kind of progress the company has made in the IMS space, my sense is probably if he can hold on for the next 12 to 15 months, he could get a price target of around 1150 here. As far as Infosys is concerned, again, a re-rating kind of story. Yesterday, we saw the company announcing some new product initiatives, and clearly from a performance point of view, I think ever since Mr. Sikka has come, we have seen performances improve. So giving it a little longer time kind of period, over the next 12 months, he could expect a target price of 1300 here.
That's the call coming in, and clearly you can look to stay invested in those names. And of course, Sun Pharma likely to gain, talking about the integration of Ranbaxy, and off late the stock has been in the news for the right reasons, so hold on there. And let's finally discuss the maximum IT exposure, TCS. Fairly well, in comparison to its peers, is how the company has performed. He's making good gains here. The Tech Mahindra has had a rough ride, but still he's in the green. And what's the call on Wipro?
I think talking about TCS, I think definitely within the frontline IT space, this is one company which is going to do remarkably well over the next couple of years. Not only the rupee depreciation, but the kind of on-site and the kind of projects the company has and the kind of order book backlog. My sense is, he should definitely hold on for the next 12 to 18 months. He could get a target price of around close to 2900. As far as Tech Mahindra is concerned, the Q1 numbers were not great, and there was volatility on the margins. The merger of its subsidiary, which it recently took over, has also not been doing well. But if you look at the overall growth expansion for Tech Mahindra, my sense is over the next 12-15 months, the telecom vertical, our senses will definitely do well, and the consolidated entity will start yielding better numbers. So here, I think he should hold on. My sense is he could get a target price of 600 here. And as far as Wipro is concerned, I think this IT company, we would be a little cautious considering the fact that, the company could not maintain its earnings guidance, and even going forward, the earnings guidance looked a little soft. If you look at companies like typically Infosys or maybe TCS. So here, I think my suggestion would be that he should switch over to Infosys, where we believe that over the next 12 months, the risk reward ratio could be better, and he could get a target price of 1300 here.
Okay, just about one change in your overall portfolio, but let's run you through the recommendations that Avinash has for you. Nevertheless, starting off with the first three stocks that you have in your portfolio, those are the banking names. Axis Bank, hold on to that one, well-researched and a good buying price, so hold on to that one and watch out for a target of 700. HDFC Bank is the other counter that you should hold on to. 1200 is this target price that Avinash has set out. Good call on ICICI Bank as well. Hold on to that investment. 360 is the target price that you should be looking out for. Karur Vysya Bank is also a good investment. 575 is the target price that Avinash has set out. From the pharma space, your investment is good in Cipla, so hold on to your position there. 750 is the target price that Avinash suggests for Cipla. Lupin, stay put there as well. A hold call coming in by Avinash. 2100 is the target price. Sun Pharma, the stock has been in news for all the good reasons, and you have all the reasons to hold on to your investment there with a target price of 1100.
Moving right on then, there's IT exposure as well in the form of HCL Technologies. It's a good stock, so stay invested. 1199, that's the target to watch out for. Infosys, in fact, Avinash is very upbeat on this stock, and he believes that this is a good recommendation that you have in your portfolio already. Watch out for levels of 1300. Moving right on then, TCS too, a big thumbs up coming in there. 2900 is the target price. Tech Mahindra also, despite the recent volatility, can be held on to. Wipro, he's a little bit cautious on this stock and prefers an Infosys instead. So stick to the IT exposure, add more infy, and watch out once again for 1300 levels. And here's an important disclaimer that if you'll be taking any advice, do remember that this is only a model portfolio and you must consult your individual investment advisor.
Okay, and with that, let's slip into another short break on Buy Now, Sell Now Weekend. But on the other side, we get you some top trading ideas. Welcome back. You're watching the weekend edition of Buy Now, Sell Now.
Okay, let's focus in on the equity markets and what a rough ride we've had this week. In fact, all the ground that we had gained, we completely lost out on. And in fact, we breached some very crucial levels on the downside with the global markets in a complete rout. 82.99, sub 8300 is where we shut shop. Sameet, I just want to get in your call as to what exactly it is that you'd advise as a strategy on the index.
See, Nifty was moving within a range of 8650 to 8300 since last 3 to 4 weeks. Today, this downside range of 8300, 8315 has now been breached with a downside gap. That clearly indicates that the upside range has now been shifted lower. Probably in next few days we'll have a range of 8400 to 8100, and so long as Nifty remains below 8400 on a closing basis, there's a high possibility that Nifty might correct towards 8150, 8100 in next few trading sessions.
Okay, that's the call coming in on Nifty. But let's get you those top trading ideas that you should have on your mind for the coming week. And Avinash, in fact, let's take a look at some wealth creation ideas over long term. Or what is it that you would like to recommend to our viewers?
Now, I think in terms of wealth creation, I have two stocks which I would like to recommend to the viewers. The first is a company called Dish TV. We believe that, the kind of business model Dish TV enjoys, and more importantly, the kind of turnaround Dish TV has recorded from the December quarter, profitability going forward in FY16 and 17 is going to be remarkably strong, and the kind of business opportunity which Dish TV has got a very significant potential if one compares the cable TV business. Our sense is that probably not only the company will return to black in FY16, but will show a profit after tax of in excess of 170-180 crores. And going forward in FY17, the kind of run rate Dish TV is putting currently around 1 lakh customers per month. We believe that the opportunity for Dish TV even from the current level looks very good. So we have a target price of around 150 over the next 12 months. The second stock, Kamya, we would be recommending is a housing finance company stock called Indiabulls Housing Finance. Again, a company which has delivered very strongly on the loan book growth. They are very large players in the loan against property segment. And more importantly, in terms of dividend payouts, this company has been very liberal in giving dividends to shareholders. So clearly, a lot of institutional interest now coming in the stock. And with the kind of growth we expect, 20-25% loan book growth, we would not be surprised that over the next 12 months, this is a very stable business and which should offer a good risk-reward ratio to investors. We are looking at a target price of around 900 over the next 12 months.
Okay, there you have it. Indiabulls Housing as well as Dish TV. Those are the two stocks that Avinash is bullish on. Sameet, let's get in a sense on the technical side as to what you would favor on the charts.
Our first pick would be Titan. Titan can be bought for a target of 368 and stop loss would be 331. Recent correction in the stock precisely halted around its 50% retracement level, which is placed around 320-325. The weekly chart certainly looks encouraging. During the penultimate week, the stock formed a bullish piercing pattern around the strong support zone and is now moving higher. Looking at the current momentum and positive placement of oscillator, we expect the stock to climb towards 368 over the next few trading sessions. The other stock that we like is ITC for a target of 355. Stop loss would be 309. Looking at the weekly chart, it is clearly seen that the stock has formed a strong base around 300, 320 and is now moving higher. On the daily chart, it is maintaining its high top high bottom formation, which is a clear sign of strength. Looking at the momentum and the positive placement of weekly RSI, we expect this stock to extend this rally towards 355 over the next few trading sessions. However, in last 2 days, the stock has rallied more than 7-8%. Hence, we advise traders to buy this stock on a minor dip, probably towards 320 to 323.
Recommendation coming in from Sameet. Watch out for Titan as well as ITC. And with that, we'd like to thank Avinash as well as Sameet for taking the time out and sharing those trading recommendations with us. And with that, it's a wrap on Buy Now, Sell Now weekend from Awan. Me and the entire team who put the show together. Thanks for watching.